Happening, listeners? It's your man Dame DNYDC, host of the Two Mics Up podcast. Back today. I think this is a really great episode because you know right now tax season is literally right upon us. Like, who would have thought 2020 ended? We end 21, and we're really looking at tax season. So today we have a special guest. I think she's phenomenal. I've had the pleasure of talking with her and working with her and just getting educated with her over the it's been about 2 years now, maybe get a little more than 2 years. But I think she's phenomenal. But before we get to today's guest, I want to go ahead and let the queen of the show go ahead and introduce herself and I see you smiling today. What's going on?
Yeah,
At least what's happening?
bro, you mentioned taxes and I'm having a little anxiety, but hey, that's just me. So I'm over here. When you say taxes and all that, I get a little anxious.
Yeah, I think.
I feel it in my shanana.
Yeah, you ain't gotta tell me because, like I said, when reaching out, looking to do this, I think I was in the same position because I feel like just a couple of months ago, I was just talking to her about this same thing, and I'm like, oh damn, like literally, here we are, and it's that time, to go ahead and get my ish together and start preparing. And I did not follow anything that this woman, any of her instructions, obviously.
Why are we like that? Like, why are black people like that? Now let's just call a spade a spade.
Look, I'm being
When
honest.
you start talking about Uncle Sam, taxes, finances, we get to a point where we just like, yeah, not right now, because I start getting, like you see now, I'm just a little shaky.
Exactly.
And we didn't even get into the show.
Exactly.
Because last year when it was the pandemic and they said, oh, we're going to extend your taxes, to me that means, oh, you don't have to do your taxes because they gave you an extension, right? So I'm a year behind. But anyway, moving past.
Moving. Right. Because we keep going with this one here, but I'm going to stop at this point, and I'm going to go ahead and let our fabulous guest. I'm going to let her take a few minutes to introduce herself and educate us. Hopefully, she's going to educate us because right now she's laughing at us because I know she's like, yo, these two right here.
We're busting the shape,
right? We're busting the shape. So please, Jennifer, please introduce yourself to our listeners.
Thank you, Dave. Thank you, Lisa. Just a disclaimer, I do not work for the Internal Revenue Service. So I am Jennifer McDuffie, and I am the owner of JMIncome Tax and Accounting Services. I am an enrolled agent by the IRS, and I specialize in helping small business owners, independent contractors, self-employed individuals pay the least in taxes. That is my goal. So a little bit about my education background. So I received my bachelor's in accounting from University of North Carolina at Charlotte. I later furthered my education to receive my master's in accounting with a concentration in taxation. I've worked in corporate America as an accountant for over 10 years. I've worked as a contractor to the government as an accountant, and I've also worked with the government as a financial analyst. I initially started preparing taxes probably 13 years ago. So I started, of course, with family and friends and coworkers, and literally just through word of mouth. My business has grown since then with no marketing, no advertising. It's just someone telling someone else. About 2 years ago, I actually started working with a coach/mentor who kind of, preached to us to niche your business down, which basically means, find your target market. So over the years, I kind of, tried to understand what segment I wanted to work with. And I would always get questions from, small business owners who are just starting out, who typically don't know where to start, don't know how to file their taxes, don't know how to set up their business. So that's when I knew that, independent contractors, self-employed individuals was the market for me. So I set that up, where I specialized in helping those particular business owners, and trying to educate them, as far as, what tax deductions are available. So basically that's what I do now is, I prepare taxes for, all individuals. However, my specialty is the small business owners, self-employed individuals, because, I do have more information to share with those particular businesses. So, yes.
That's good. That's interesting, because taxes can be intimidating.
Very. Very. Yep.
Yes, indeed.
Well,
Mm.
I've had the pleasure, like I said, she's been a big help. Not only with two mics up, my previous business, we were looking to do some other things. Um, I've just found because I too am married to a financial analyst, um, and my spouse was blown away from the conversation that you not only had with us, but our daughter, who was starting her own business. So that's why I was really hell bent on really getting you on, because I just think we need more services and more individuals like yourself who can educate people. Like Lisa said, it's very intimidating, and even I want to say the most intellectual of us, or those of us who think we are, um, you always need that extra help and that hand from a professional that does this daily. So I'm really glad that we finally got our schedules in sync, and I'm glad to have you here today.
Absolutely. Yep. Thank you.
So what inspired you to want to become an accountant and assist like small businesses in the community with their taxes? What was just accounting something that's just in your blood?
Right. So growing up, I've always loved math. I've always loved numbers. But I didn't want to be a school teacher, even though that's what my dad wanted me to be. I wanted to be a businesswoman. So, later on throughout high school, I hear of accounting. I looked into it and I knew immediately that's what I wanted to focus, my career in. I also have a heart to just helping people. I love to help people. I love to help educate people whenever they're having issues. So I fell in love with taxes. I was working for a small tax company as a side part-time job back in 2008. So I knew at that time that preparing taxes was, the field for me. And honestly, it is a pleasure that I receive when I know that I have resolved someone's tax matter, whether it's something huge for them, but to me, it may be minute or very small, but at the end of the day, I've resolved their problem. So when I, get that feeling of inspiration from helping someone, that kind of inspires me to want to help other people. And the other thing is like the education component, because I find that a lot of our people in particular, their parents did not teach them about proper accounting, bookkeeping, how to run a small business, So I also have to educate individuals along the way of how to successfully run their business, how to implement sound accounting practices so that their business is successful. So, all of those different things actually inspire me to want to continue helping others grow their business. So that's why I, got into accounting, and why I know that this is the field for me. I tell people all the time, tax avoidance is completely legal. It's just the tax evasion part. You can avoid paying taxes all day. No one wants to pay taxes. However, if you intentionally and deliberately try to avoid paying your taxes, then that's when you run into issues with the IRS.
Well, let me ask a question on that, because excuse me. The difference, what's the difference between avoiding and evasion?
Okay, so avoiding is you're taking steps to legitimately lessen your tax liability. So you keep your records of, the expenses that your business incurs so that you can legitimately write it off on your tax return. That's tax avoidance. That's okay to do. The IRS encourages you to deduct your expenses. However, tax evasion is when you have filed your taxes and you haven't paid your tax liability, and you deliberately haven't paid your tax liability, or you're avoiding to pay your tax liability. So, that's when the IRS comes back. They assess penalties, interest. They can levy your property when you evade, trying to escape the IRS. So that's basically the difference.
So that doesn't mean that someone who has not paid their taxes for the first time last year, does that mean not paid or filed? Because there's a difference. See, and I think the lingo is where we all get tripped up. So not filed their taxes last year, is that tax evasion or avoidance, or it's just late filing?
That's a great question. So that is late filing. So the IRS has different categories of penalties because they will assess penalties. There is a late filing penalty, and then there is a penalty where you haven't paid your taxes. So you are probably, if whoever is in that situation, if if they have not filed their taxes, then they are subject to a late filing penalty.
Okay, but long as you get it done, and I need
Right.
But anyway,
moving right along.
Right, exactly. So when it comes to tax preparation or tax planning,
Yes.
what is the priority when you're assisting clients?
So the tax preparation is always my priority because, as I mentioned previously, the IRS is accruing interest daily. So if you haven't filed your taxes, the IRS, for instance, if you work a W-2 job, your employer reports your wages to the IRS. So they already know how much income you made. They're just waiting for you to file your tax return. So whenever you do file, typically the tax return is due April 15th. So after that date, if you haven't filed, your tax return is subject to interest and penalty. So that's why I always start with the tax preparation first, because the sooner we get it filed, we stop the interest and penalties. I have seen so many times where individuals, they filed their taxes. For instance, they may owe, $2,000. However, they have not paid anything towards that $2,000. So here it is a year later, I go pull their account from the IRS to see what their balance is. Now they owe $4,000 because they haven't paid the initial $2,000, and the IRS is accruing interest every day until they receive their payment. So we're going to tackle the tax preparation first. So once that is resolved, then we can, go into the tax planning phase to make sure moving forward, everything is taken care of. So, tax preparation, then tax planning.
Yeah. All right.
Interesting.
It is very interesting. See, I got my little hand going over here. Excuse me for a second. Writing this
Like
stuff.
class, right?
Yeah, man. Like I said, I've been down this road with her. Like I said, I can't plead ignorance no more. This is like the second time I sat here and I did not follow any instruction that she gave me. So I got to get it right at some point. So
well, the Uncle Sam is not the people you want to play
nah,
with.
definitely not.
As an accountant, And one thing she said is, you don't want to play with Uncle Sam.
Okay.
And
So Jennifer, for some of our listeners interested maybe in starting their own business,
Yeah.
there are different types of business structures that are out there. Um, and I'm pretty sure from what I've learned, they have different sets of rules. Could you just
Yeah.
kind of briefly, explain
Yes.
some of that to our listeners, please?
Yes. So I always tell my business owners, you want to have an accountant on your team, and you also want to have an attorney on your team. So when it comes to forming your business, you want to touch base with both to understand your liability when it comes to, if you were to get sued, what, business structure is best for you. And then from a tax preparation perspective, you also want to have that understanding as far as what tax liability your business is responsible for. So for the IRS purposes, there are 4 different business types that the IRS recognizes and requires a tax return for. So I'll try to just kind of explain these, as simple as I can. So most people are familiar with an LLC. When I ask business owners, what type of business are you? Typically they'll say, well, I'm an LLC.
Mm-hmm.
Okay, perfect. An LLC is formed at the state level, which protects your business, limited liability company. However, in the eyes of the IRS, they don't recognize an LLC as a business entity. So the 4 different business entities for tax preparation purposes are sole proprietorship, partnership, an S corporation, and a regular corporation known as a C corporation. So a sole proprietorship is, you're a single person, just one business owner, which is actually typical. A lot of business owners that I, interact with, run into, it's just one business owner. They went to their state, they filed as an LLC, and for federal tax purposes, they're treated as a sole proprietor, meaning you're a disregarded entity. You will file your personal tax return and you will attach a Schedule C, which is the profit and loss from your business, to your personal tax return in the simplest form. So that's the Schedule C. Now, also keep in mind that if you're self-employed, you're responsible for paying your own Medicare and Social Security tax. So if you were a W-2 employee for a company, you look on your W-2 or on your check stubs, you're paying, FICA taxes. You're paying into Social Security. You're paying into Medicare. However, when you're self-employed, you are solely responsible for paying into those taxes yourself. So that is where the self-employment tax comes in. So once you file your Schedule C, you attach it to your tax return. There is a 15.3% self-employment tax that you are responsible for paying as a self-employed individual. The next business entity is a partnership. So that's when you have, more than one person coming together to form a business. And with a partnership, you have to file an informational tax return. So the partnership doesn't pay taxes. However, you have to file that information to the IRS, and it's considered a flow-through entity, meaning the information from your partnership tax return flows over into your personal tax return. So after you report your profit from the partnership, all of your expenses, you have your, gross profit, you split that between however many partners in the business. It's reported on a K-1 form. You use that K-1 form to file your personal taxes.
Wow.
Yeah.
Wow. Thank God for you, honey. Thank you. Thank you, Lord. May He cover and bless your soul. Because
Yes.
that is what people be so overwhelmed, and you must consult a professional, because the
Definitely.
tax language, the tax laws, it's just overwhelming. And it has nothing to do with educational level. It doesn't have anything to do with your comprehension level. This is skill, practice, knowledge. This is a profession. You can't go into this thing. You need a professional.
all day,
Absolutely.
all day.
Absolutely.
And that's why I say
So,
it's
mhm,
great to have her on, because this is the knowledge that, when you listen, like you said, Lise, I'm sitting there, like I said, I think I'm a pretty smart guy, and but when she really started breaking it down, I'm like, well, hold on, that wasn't nowhere when I was reading. What the hell is that?
Right.
So
You go on TurboTax and you
yeah,
have confidence, right? You
yeah,
get down there, you be like, what?
man, what? You know what I'm saying? So y'all, I hope y'all listening, man, because this right here, this is like really an educational piece that, if anything, and I'm gonna say it now and I'm gonna say it again when this podcast is over. Y'all need to reach out to this woman and really get your business and get your taxes in order, because this woman is fire. She really knows what she's doing. She's phenomenal.
thank you.
Mhm.
Thank you. And then really quickly, the last two business types, the S corporation. The IRS does have requirements to be able to elect to be treated as an S corp, and we can go over that. If anyone has any questions about that. However, an S corporation is similar to a partnership. However, you can actually be one person and be treated as an S corporation. However, with an S corp, if you're the business owner / shareholder, you have to be on payroll. You have to pay yourself a set salary and set up payroll where you're taking out Medicare, Social Security taxes from your regular wages. Um, and then according to the IRS, your salary has to be reasonable for someone doing your job. So, that's something that people always ask me, well, what is a reasonable salary? Because they typically want to pay themselves the lowest amount. However, what I tell my clients is what you could do is go look on Indeed, go look on Glassdoor for someone else that's doing a job similar to yours, because that could be your backup to come up with a reasonable salary to pay yourself. And then similar to the partnership, the S corporation doesn't pay any taxes. It basically flows through over to your personal tax return. And then the last business entity is a corporation. Just, the INC, a lot of people know about. You basically have double taxation is what a lot of people know about corporations, is that the shareholders will pay their taxes, and then the corporation also files a tax return and pays taxes as well.
Wow.
Okay, so I hope everybody listening, if you got to hit the rewind and go back and listen, or if you just don't have
Just
the
call
patience,
a number.
right? Just call the number, right? Because we're gonna give her information at the end. Just call her. Because I know Lisa and I are sitting here. Like I said, I've had the pleasure of sitting with this. This is the third time I've really sat and listened to her talk, and I'm still learning something every time. Like, again, like, you got to get a professional and call her when this is over and get yourself.
And just push the paperwork and say,
Yeah.
I messed up. This is what I did. Fix it. Whatever I have to pay, I'll pay. But just fix me. Not talking about.
Right,
Absolutely.
I mean,
right,
but speaking for anyone.
right. So, Jen, I gotta ask this. So, in your role as a professional accountant, um, can you share kind of like what records should be kept to file taxes, measure profitability and that type of thing?
So to file taxes, I would say you want to keep every record, every document, everything that you claimed on your tax return. So typically the IRS has about 3 years where they can go back and audit your taxes. So you want to make sure that you keep your records for at least 3 years. However, in some instances, the IRS can go back further than 3 years. If they find, let's just say they're auditing your taxes, they find errors, they can actually start going back to see, were these errors made on prior tax returns. So typically, as a rule of thumb, I tell clients, keep your tax documents together for a period of 3 years. Now, what documents do you keep? That includes literally, as I mentioned earlier, anything that you claimed on your taxes, W-2s, 1099s, receipts, invoices, bank statements. Just imagine if you were under an audit and you had to prove to the IRS, these tax deductions, you want to be able to substantially, defend your position as a taxpayer. So how do you do that? You have to provide documents. So just make sure you cover your bases. Keep everything that is reported on your tax return. Now, as far as tax planning is concerned, I always preach to my business owners, you should have a sound accounting system in place. I recommend, QuickBooks to a lot of my clients because it is user friendly. You can actually take a picture of your receipt and upload it into the software. That way you don't have to keep a hard document, with you for years. So, and QuickBooks is, like I said, very user friendly. Whenever it comes to tax preparation at the end of the year, you're not searching for all your different documents and receipts because along the way you've kept your records, which means when it comes time to hand over your information to your accountant or your tax preparer, it's smooth sailing. You can literally hit a button, run your profit and loss statement, and here you are, tax preparer, prepare my taxes for me.
Wow.
So yes, if no one remembers anything from this podcast, make sure you have your documentation together.
Yeah. The adult, at least I see you. Cause that's how I felt when I first talked to her. Cause I was like the Kimbe Matumbo. No. Not in my house, because it was everywhere. So I know how you feel. So
instance, I'm just gonna ask a follow-up question if you don't mind.
go right ahead.
Absolutely.
Do you run across a lot of people who just do not have it together? Like, not intentionally don't have it together, but just a mess. And is that a common, practice? Like, we're just, not we, I mean, they are just, just a mess when it comes to taxes. And you're like, what is this pile of paper, right? Do you come across people like that?
Absolutely.
Okay, so we're not alone, Dave.
No. Trust me, I already knew he was going. I was already counting myself in. Yep, that's me. Sure is. Yep, I did.
Absolutely, yes. So I often do run into, those individuals who they honestly, they haven't been keeping good records for however many years, but they come to a point where they are ready. And that's what I like about those clients. That, they admit that, I haven't, kept good records, but I'm ready. So that's when, I set them up with the proper accounting systems, the proper accounting tools for them moving forward, so that, whenever, for instance, with the whole coronavirus and the pandemic, Congress came out with the PPP funding, the Paycheck Protection. So in order to apply, you had to produce, tax documentation, profit and loss statement. So last year, I had a lot of people coming to me because they didn't have their profit and loss statement. They hadn't filed their taxes, in 2 or 3 years. However, they heard about this funding that Congress has approved. Yep. And it's like, how can I, get some of the funds? So that's when, we have to sit down together and literally, pull bank statements, get their information together, because we want to take advantage of this funding that is available. And I see, you know, in our community where a lot of successful bigger companies, they have accountants on their team. They're already prepared for these type of situations. They can run their profit and loss statement at the drop of a dime. However, our smaller businesses aren't that fortunate. They don't have accountants. They don't have, you know, a tax, you know, person, or they haven't filed their taxes. So they have to go seek out someone to help them with, you know, getting their books and accounting and everything in order so they can take advantage of the funds that are available. So yes, I often will encounter individuals who haven't filed for years, haven't had their books in order. However, when they come to a point when they're ready, if you're ready, then yes, I can definitely help you, you know, implement a sound accounting system moving forward.
So do you help on the back end too? Do you help them file those years that they had in, you know, got it together? So do you start where they're at now, move forward, or do you go back and bring them up to date through, you know, with their taxes and stuff?
Yes. So I typically will bring them up to date.
Okay.
So a lot of times they have received a letter from the IRS, and that's why they reach out to someone, because they freak out like, oh, I got this letter from the IRS. I need help. So, and then of course we know the IRS, they're a few years behind. They may send you a letter in 2021 for, you know, 2020 taxes. And then it's like, I don't remember what I found on 2020 or, you know, 2019. So of course I will actually, because I can go and pull transcripts from the IRS. I can see exactly what was reported to the IRS from any, you know, employer, whomever, and basically help them prepare their taxes to match what the IRS has, you know, on
Okay.
record for them.
Okay.
So just to kind of bring them up to date, you
Mhm.
know, get rid of some of that penalty interest that they've been accruing for years, and
Yeah.
get their tax liability under control. So yes, I do offer assistance with that as well.
Okay, that's good to know, because you know you sometimes you kind of embarrassed about your tax situation, and you know you ain't really been a good person when it comes
Trust
to,
Mhm.
me.
you know,
No,
keeping
no
books.
judgment, no judgment zone over here. Trust me. There's
Love it,
always
love
someone
it.
that's in a worse situation than you. Trust and believe.
Okay, so how often should a client meet with you? You know, how regular should someone be up to date with you know, meeting with you and staying on course? Because once you get there, you have to stay there.
Exactly. So I typically will say at least twice a year. I do have clients that meet with me on a quarterly basis just to make sure that they're on track, which is perfectly fine. However, I you know, tell my clients, you know, we should definitely meet at least, you know, semi-annually, middle of the year, to make sure everything's going smoothly. Because what I don't want is at the end of the year, I haven't spoke to you all year, you haven't been keeping track of your, you know, expenses, your bookkeeping, and then it's December going into January, tax season is around the corner, and now you're freaking out because you have to go back and get caught up on all of your bookkeeping. So
Right.
I recommend, you know, we meet at a minimum twice a year.
That sounds good.
Yeah,
Twice a year does sound good, because at least you have it consciously in your mind. This is what we're doing. Because with day to day life, you know, taxes is not something everybody want to think about. But it's good that you know you stay on the forefront. It's in your mind, and you have good practices moving forward. What type of fees can a new client expect with your service, small business and individual?
so I've never run across two individuals that have an identical situation.
Okay.
So it depends. It varies based off of your particular tax situation. So what I encourage, people who are interested in booking a service is I offer a free 15-minute consultation. You can go book a, consultation with me. We can talk about your specific tax situation. And depending on, what you have going on at that time, I can provide you, the fee associated with your situation. So that's what I typically will, offer clients. Let's just get on a quick call, talk about what you got going on. And then at that time, I can let you know how much I would charge to resolve your issue.
Right. Oh, and that seems fair enough because, it's just like anything else. You go to the doctor, there's a difference between having a flu and needing heart surgery, right? So, I mean, that's how I'm equating it. I don't know.
Absolutely. Absolutely.
Oh,
No, but it's true. I would tell anyone. I urge anyone to take that 15-minute consultation. It could really change. Yeah, I mean, seriously, and I mean this in all seriousness because I've done it. And I encourage anyone to just call Jennifer. Um, at least if she does not or is not the person that can help you, at least you have some knowledge and gain some insight on what you should be asking or maybe what you should be looking for in in someone like her. But she's the truth, and I think highly of her if you haven't gotten that already. Now, and what we talked about too, one of the things I did want to ask, so talking about taxes, and you mentioned like being audited, is that something that can you represent a client, if they're audited by the IRS?
Yes, that is a great question. So, what I typically will educate people on is the difference between a tax preparer and a tax professional. So, anyone can literally prepare your taxes for you. However, if you are under audit, the question is, can your tax preparer represent you before the IRS? So, as I mentioned earlier, I am an enrolled agent. So, what is an enrolled agent? It basically means I have a federal license to represent any taxpayer before the IRS across the country. And
Wow.
there's, typically 3 individuals that can do that. One is an enrolled agent, 2 is a tax attorney, and then 3 is a CPA. However, with a CPA, a lot of people don't know that a CPA is only limited to their state. So they can only represent in the state where they're certified. However, an enrolled agent can represent anyone across the United States. So
Oh,
if you have, tax liens, tax levies, you're drowning in IRS debt, yes, you can reach out to myself or any enrolled agent for that matter to help, see if we can do, negotiate with the IRS to get your tax liability down. If you're under audit, you don't want to go, talk to the IRS yourself. You want to hire someone, retain someone to speak to the IRS for you, then yes, I can do that for my clients.
wow. Wow.
okay. Again,
Very
just
interesting.
educated. Never even knew all of that. So again, this blew my mind. I gotta ask then. So with that, because I don't want to call it a specific role, but with the role, I guess, like, what's the biggest challenge you have within your role? And how have you been able to overcome that challenge?
Um, so like I said earlier, I rarely run across individuals that have the same issue. So I'm often faced with new tax problems, stuff that I've never encountered before. Um, so which to me is a challenge in and of itself because now I have to figure out what's going on with this particular person and research to find out how to resolve their particular issue. So whenever I am, faced with, something that I have never encountered before, sure, I'm a researchaholic. I will go, look up stuff, read stuff, talk to colleagues. I'm in a few, tax groups. I'm a part of a few tax associations. And I always reach out to other people, who have had a similar situation to mine. I contact the IRS myself and figure out what's going on with this particular tax client and try to, get it resolved as best I can. So I think, for me, it's just a matter of, reaching out to my resources whenever I am faced with something that I've never encountered before to find out how to resolve that issue for that particular person.
Okay.
And is that because the tax laws are always changing? I know with the other administration that just left, I mean, we've seen a tightening of what you could claim on your taxes, and then it all went away. Like it seemed like overnight. So is that a part of it? The constant revolving changes?
Absolutely. You're right. Absolutely. So what, maybe tax law today wasn't tax law, in 2018 under a different administration, and depending what, on which year the IRS is auditing your taxes, you have to go to that particular year to make sure that you're applying the correct tax law. So, every time the administration changes over, there's different rules, there's different tax laws. So we as tax professionals have to make sure that we're constantly keeping up with all of the new changes, the tax, codes. For instance, working from home. A lot of individuals for the past year, due to the pandemic, have been working from home. As of 2018, if you are a company employee, meaning you work for an employer, you receive a W-2, you cannot deduct any of your home office expenses on your tax return. Why is that? So as of 2018, under the Trump administration, they did away with home, job non-expenses from your job that you can deduct on your tax return. So unless you are a business, unless you operate a business, then you can deduct, home office expenses, utilities, so on and so forth. So a lot of clients that I have, coming in this year, tax season, are asking me, I work from home, with my job. Am I able to deduct, some of this cable, internet, light bill, so on and so forth? But unfortunately, no. Unfortunately, no.
Oh.
Yeah.
So that's interesting, because would that change under the new administration? And would it go retro?
There's a lot of changes going on currently, actually, which is part of the reason why the IRS has extended tax season to start later this year. It usually starts, around mid-January, end of January, but they've extended it to start February the 12th. There are a lot of tax forms still in the draft mode. They haven't finalized a lot of the tax forms. So every day I'm seeing emails from the IRS with updates, different forms being updated. So currently, the 2018 Tax Cut Jobs Act under the Trump administration is still in effect. You cannot deduct, as of today, you cannot deduct any, expenses relating from working from home if you work for an employer. That's between you and your employer. So,
wow.
yeah, unless, like I said, if you run your own business, then yes, you could deduct a home office expense. However, under the new administration, they could change that tax code.
Okay. That was very interesting to know, because I think we just don't get it, but that's good.
No, look, we got it today, y'all. And I'm telling you, we got it today. So if y'all haven't been listening, we are here today with Jennifer McDuffie of JM Income Tax Services. She is
Yes,
a phenomenal tax professional. This
thank
is
you.
not a tax prepare. This is a tax professional, people. So I mean, we can go on and on today. I've learned so much. Jennifer, I have to say thank you for
Yes.
taking time out today and speaking with us, educating us. I'm glad, like I said, we finally got ourselves in sync to get together. So, before we go, I want to allow you some time to, share your information with our listeners, so they can follow you, find you, call you. Please, people, don't harass. Call and get yourself some help with your taxes. This is the woman that you want to talk to. So, Jennifer, please go right ahead.
Thank you, Dave. So yes, I can be reached. My website is jmincometax.com. If you go under contact us, there is a link to schedule the 15-minute free complimentary consultation that I mentioned earlier. I am on social media. You can follow me on Facebook at JM Income Taxes, on Instagram at JM Income Tax. So, or you can call me or text me 571-989-2648, and that will come to my cell phone. A few additional things that I did want to share with your listeners while we're wrapping up here is, 2020 was a very different year for everyone, especially with taxes this year. And there are, quite a few different tax laws changes that came about from 2020. I'm sure everyone is now familiar with the stimulus payments that went out. And if anyone did not receive their stimulus payments, you can actually claim those on your tax return when you prepare for this year.
Hmm.
Number two, unemployment compensation, which a lot of individuals, definitely took advantage of due to them being out of work for a while. Just a reminder, make sure you do file your unemployment on your taxes because it is considered taxable income. Um, a lot of the states allow you to download your statement for the end of the year on their tax website, and then there are some states will mail out the 1099-Gs to the taxpayers. But just make sure you do include that on your tax return. Otherwise, you will receive a notice from the IRS. Um, and then lastly, for the independent contractors who were out of work this year because of the pandemic, there is a tax credit available for the independent contractors where you can actually claim credit for the time that you were out sick, either due to having COVID yourself, taking care of a family member who did have COVID, or taking care of kids who were, out of school because of the pandemic. So yeah, just an FYI, just to share with the listeners.
Thank you so much, Jennifer. Really appreciate it. Lise, anything before we go ahead and close out this? Man, this was educational. Yeah.
Man, listen, my head about to blow off. But what I really like, Jennifer, about the way that you convey the taxes is that it's in layman's terms and it's understandable for people who may be a little intimidated by taxes and intimidated about going forward and getting, they stuff cleaned up.
Mhm.
You make it very no judgment. We're here for you. We're going to make it right. So it makes it feel like, a little bit more inviting and comfortable. So I do thank you for that. Because
No
that's
problem.
some of us need a little coddling.
Yeah. We're not going to go ahead and look at anybody as we continue to move on. Um, but right about this time, listeners, thank you for tuning in. Check us out next week as we come back with another great episode. We'll be sitting down with actor, writer, producer Lawrence Adisa. You've seen him in movies such as Grounders and Clockers, and he's a veteran from Money Earning Mount Vernon. He'll be joining us next week. And like we always ask, please subscribe to the podcast today. You can also subscribe online at www.2micsup.com. You can follow us on our social media accounts, IG, Facebook, and Twitter at 2micsup. And like we always do about this time, stay safe, stay blessed. Mike's out.
Mike's out.
Hey, what's happening, listeners? Stay tuned as we bring to you a whole new featured series to the 2 Mics Up podcast lineup, King's Corner. Kings, we're going to be sitting down, chopping it up with you, going over things that's coming straight from the male perspective. Stay tuned.